So once again, like I said, I've been following you for a super duper long time. The content is through the roof. Like any credit card, any and all things related to just banking and funding, you're like 10 steps ahead and literally giving the game on top of the game. Take a couple steps back. Walk me through how you even got into the credit space in the first place, ultimately to become a credit plug.
So I started by getting denied for credit, right?
Okay.
My journey kind of started from a derogatory standpoint, not being educated on credit, and then going through these different life experiences where credit was a big factor and it prevented me from being able to do something, right? One of my earliest memories, I remember about a year after graduating from college, I'm probably like 23, 24, went to the car dealership because I'm like, I just graduated, I just got my new job, let me upgrade my life. So I remember at the time, I think the new Camaros, they come out, and I went to the dealership. You know, I had a job, you know, making decent income, not really, you know, cognizant of like the condition of my credit, you know, that I defaulted on some credit cards while I was in school.
Right.
Student loans kicked in, I wasn't paying for.
Right.
So I got a rude awakening when I went to the dealership and they refused to show any cars to me based on what my credit score was. And so a couple other situations, you know, trying to rent an apartment, these management companies, they'll run your credit, they'll do LexisNexis, they'll do all these different checks on you. And I wasn't passing. So that's when it dawned on me how important the credit was. And so then I set out on a journey to figure out information on how to get access to financing, all right? And so what I would do, I would apply to a lot of different places. I would get hard pulled, so I know where they pull from. Or let's say I get denied, they give you a disclosure to tell you, okay, the parts of your credit report that impacted the decision.
Right.
So then you can use a deductive method, go back and look, okay, next time I apply, let me make sure I get these things in order, right? Whether that's your utilization, whether that's your payment history, whatever the case is.
Right.
So I kind of took a deductive approach, kind of working backwards, okay? What are the financial institutions looking for in terms of customers that they approve? And so a lot of what I did was like trial and error, just kind of figuring out. And then I was undergoing that 4 or 5 years, just kind of figuring things out. What are some good credit cards to get?
Right.
I started off with secure credit cards because I couldn't get the unsecured ones because my credit. So I figured, okay, if I put up a deposit, get my foot in the door, and then hopefully demonstrate and prove to the bank that I'm a worthy customer. And so that actually helped me with establishing relationships with different financial institutions. After a while, I said, I just sat back one day and I said, well, if someone else had the information that I just, you know, gathered firsthand, it would shorten the learning curve. So it's not going to have to take them 8, 9 years to, you know, figure things out. They could figure things out sooner and be further along. So then I started off on Instagram. Long story, Instagram kept deleting my account.
Really?
Yeah. So I don't know what it was, but I think maybe people were reporting my account.
Mm-hmm.
So then I said, forget this. Let me just start a YouTube channel. And so the rest is history. I started posting videos late 2019. I think 2020, a lot of people were looking for financial resources. So like the channel kind of took off and the rest is history.
I love it. I love it. So now you essentially took, you know, a tough situation that for a lot of people, I think would cripple them and use that as a foundation for you to get into the space. And not only you change your life, but now create content where you're helping other people do the same. Let's talk a little bit more about that, right? Because like I said, you provide high value information on all things credit, financing, funding, learning how to leverage these banks the right way, how to put yourself in a position to maximize things on the personal side and on the business side. From your experience, what would you say for somebody who's looking to just get started in terms of building out their funding sequence or build out the amount of funding to get on the personal side? What's some different strategies they can do to start out, put themselves in the best position possible?
That's a great question. So I would say in 2023, there's a lot more ways and opportunities for you to be able to build credit, right? I'm a little bit biased to the way that I built it. So what I did was I did a lot of secure credit cards, the Navy Federal N Rewards, Discover It, Merrick Bank, you know, just getting my foot in the door, because basically what I wanted to do was just put as many positive accounts on my credit report as possible. You also got shared secure loans. So, there's a lot of videos out on the pledge loan hack where you basically put up your own funds, get a shared secure loan, pay off, let's say 90% of it immediately, and then it'll report a low installment utilization on your credit report. And so what that conveys to lenders is that, okay, you have this credit account that's almost paid off. So, obviously it looks like you're responsible with managing your finances. And so those are some beginning ways. I would say the secure credit cards. I mean, they even have ways of reporting your rent nowadays with Rental Karma,
Right.
There's Boom Report, there's a handful of others.
Right.
Reporting utilities. So these are ways for you to add positive primary history. So for someone who's just starting, I would say the thing that you want to focus most on is going to be your payment history.
Right.
Now, I also wanted to clarify this because sometimes, we might think that, okay, because we have other accounts, maybe we have one account with a late payment on it, not that big of a deal. But what I realized from someone who actually had derogatory credit and now have, well into the 800s is that even the smallest imperfection is going to count against you because you're automatically going to be flagged as high risk. Even if it's, they say information can stay in your credit report for 7 years. It doesn't matter if it's 6 years and 11 months. The mere fact that it's on your report is going to hinder you. So I would say, focus on that, making sure that you have, stellar payment history. Again, there's secure credit cards to graduate. I'm a big fan of those because you put your money up, you get your money back, and you get to keep the credit limit, and you're building a banking relationship. So then you can transition and upgrade to bigger and better products within that institution. So yeah, I would say, at a basic level, you want to have a good mix of accounts, some credit cards, installment loans. The rent reporting is huge now too. That's another thing that, I didn't use when I was building credit, but that's a whole different category of your credit report. So yeah, there's a handful of ways. I would say probably one of the most important things outside of that is building a banking relationship. So one thing that you can do, one thing that banks love is when you have deposit accounts with them. So if you have a checking account, a savings account, you could go a step further and get insurance products or just embed yourself deeper into that financial institution. Banks have what's called relationship rewards. So it's the more embedded, the more accounts you have, it's just the more favor you'll have with that financial institution. So that's one of the ways that I really was able to build because I couldn't really rely on my credit scores to begin with. So I had to really build that banking. I was actually forced to build that banking relationship and demonstrate to the lender that I'm a worthy and a viable, customer. And the last thing I wanted to impart with is that you want to approach financial institutions as a partnership, right? I think a lot of times, we might think of things one-sided. Yes, we want the credit cards, we want the loans, but you also have to position yourself as an asset, as a partner to the financial institution, because it's a mutually beneficial relationship. So once you kind of understand that and you play that to a position where it's a relationship, it's a two-way street, then you'll be able to build a lot of relationships and build your credit and be able to get different types of financial products from different banks.
I love it. One other question that I had for you as well, we talked about relationships and how that plays a pivotal role in the amount of funding that we're able to get access for. One thing we hear talked about a lot is bank tier, right? Tier 1, tier 2, tier 3 banks. How big of a role does choosing the right banks and the right tiers also play when it comes to how much funding we're putting ourselves in position to get?
That's a great question. So generally, when it comes to, let's say, the big banks, the Bank of America, the Chase, American Express, top tier banks really cater to a prime credit profile. So if you have, let's say, if you have negative accounts, if you have a sub 600 credit score, you're not going to get approved with American Express.
Right.
Because their business model does not cater to that.
Right.
They cater to prime. So the top banks, they're very risk averse. So they want customers who are going to be low risk. And so depending on where you are, let's say you're new to credit, right? You're 18 years old, you're just starting your credit journey. You could actually approach the prime banks first. You can actually go to Chase and get Chase Freedom credit card, right? There's entry-level credit cards for people with new credit. Now, there's a difference if you have derogatory credit or rebuilding credit, because you're not going to be able to go to the Chase and the Amex, right?
Right.
So I would say, depending on where you are, if you're new to credit, I think building a relationship with the top banks first is good, because let's say later down the road, you want to go to a credit union. Credit unions might see, okay, you have Chase, you have American Express. Well, a lot of those institutions know that they have a more rigorous underwriting process. So they're going to see, okay, you're good enough to get approved for Amex, you're probably good enough to get approved for different credit unions, right? My journey was a little bit different because I actually started with the credit unions and then went to the tier banks, the top tier banks.
Right.
But yeah, building that relationship is definitely important. And I would say if you're looking to build multiple relationships, the sequence in which you go is also important because certain institutions might be, let's say if you have too much credit, there's certain banks that they're going to deny you even if you have good credit, because they just see that you have too much exposure, or they see that you have options. Maybe you're not going to use their credit cards as much, right? And so, yeah, the order does matter. Of course, there's the Chase 524 rules where it's like, you got to get in with them earlier on and then maybe go to other banks afterwards. Some banks, they don't care, like American Express, they don't really care how many accounts you have. So sort of understanding that, I think helps with the sequencing, and just understanding the business model of the bank. Not every bank is a good fit for every customer, right? You have banks like City National Bank, where they cater to high net worth individuals. So if you don't have any money and any deposits, you're not going to want to apply for them. So just I would say, do a little bit of research. There's great resources, YouTube. I mean, there's your channel, there's my channel. My FICO is a great resource. I'm always on there and just gathering information. And one thing that I'll do is I'll actually call up to the financial institutions and try to probe a little bit of information before I actually, decide to build that relationship.
Let me dive more into the calling. You're talking about building out a sequence, right? Part of that is, of course, knowing where these banks pull from before you apply. If you don't want to go and find 3 banks and they all pull from TransUnion,
right.
Now your credit report is, down in the dumps. I've heard talks about some people saying, well, they try calling in and asking, and the bank will say one thing one day about, okay, well, today we pull from Equifax and tomorrow we pull from TransUnion. Are there, based off your experience, what are some of the different ways we can know for sure where these banks pull from without having to ding our credit first to figure it out?
Okay, so two things. So one strategy that I always do, right? So let's say with the credit union, I'll call the credit union and I'll tell them, hey, look, I'm looking to, and it could be whatever, I'm looking to refinance my car, or I'm looking to open up a CD account, right? Maybe not direct like, hey, what credit bureau you're pulling from, because some institutions may be reluctant to give you that if you're forward with this. So one thing I do is I'll say, look, I'm interested in, applying for a loan, but before I want to make sure that, I'll tell them basically like, look, I freeze my credit reports for safety and security reasons. I'm interested in applying. Should I unlock my credit, scores before I apply? And they'll say, okay, yes, of course. And I'll be like, one trick I'll say is, well, I have all 3 of them. Is there a particular one that I should unfreeze? So that way it's a little bit more subtle. It's not as direct. And I'm eliciting the information that I paid for in the first place, right? So that's one way that I'm able to, gather information. I would say mostly at credit unions. Another way that you could figure out where a financial institution pulls from is that you can just freeze all your credit reports and then apply. And so you can find out where you get what's called a block inquiry notification.
Say it again, block inquiry?
A block inquiry notification.
That's a gem, I know about.
So Experian will give you a notification if someone attempted to pull your credit. If it's blocked, it's not going to go through, but you'll still get a notification like, hey, this institution tried to pull your credit. So that's another way that you can, go about trying to figure out who they pull from without actually dinging your credit. And then also too, you could always call back and get a second opinion. Sometimes the frontline customer service reps may not know those specific details. So it's always good to get a second opinion. One thing I will caution is that right now, a lot of lenders are changing their data points. So like what used to, case in point, Citizens Bank, a lot of people knew they pulled Equifax. Well, a lot of institutions are moving towards Experian. Why? Because Experian has SSN verification, right? So it helps clamp down on fraud and stuff like that. So yeah, the one thing is like the data points are always evolving. So if you see a video from a year ago, 2 years ago, always take that with a grain of salt because things are always evolving, especially right now in this current economic climate we're in.
I love it. To close things out, like you said, you came from a situation where you essentially were, for lack of a better term, forced into credit, right? Because you had a negative profile that put you in a situation where you couldn't do things like get an apartment, get a car, and things like that. Fast forward some years later, you've become one of the most prominent figures in the credit space, teaching individuals from all across the country different ways that they can build, restore, and also leverage their credit to put themselves in a better financial situation and beyond. What do you say to the individual that was exactly where you were a couple years ago, but they're there right now, right? In terms of just giving them a sense of guidance or direction. Maybe they're looking at their current financial standing and they're like, man, I don't know. Yeah, I don't know if I can go out and get out of this. I don't know what I need to do or where I need to be or who I need to reach out to turn things around. What would you say to a person like that?
I would say it's definitely a journey. You know, I've been in the same situation. I started with a $300 Capital One Platinum credit card. It's my oldest credit card. I've had it for almost 10 years now. And, you know, today, you know, millions of dollars in unsecured lines of credit. So it's a journey, it's a process. One thing is that, you know, information may not be relevant or pertinent to everybody at their particular stage, right? So just always kind of understand that. And also I would say getting access to the credit, it takes time, right? You have to build up prerequisites. You have to build up data points and, you know, it's just an overall process. So just embrace the process, be disciplined, and everything will work out.
My guy. Listen, thank you so much. Always a pleasure getting connected with you. Let the people know where they can find you.
You can Credit Plug, Google Credit Plug, Alan Econ on IG.
There you go. My guy. Appreciate you, bro.
Absolutely.